Continuing on with our myth series, one of the myth that is very common is when somebody buy a stock of 100 rupees versus 1000 rupees, they feel that it is easier for a 10 rupees rise for a 100 rupees stock, but it's very difficult for a 1000 rupees stock to go up by 100 rupees. Actually, both of them is going up by 10%. Absolutely no difference. This myth is so stupid. When a stock of a 100 rupees stock goes up by 10 rupees, the value of the company is increasing by 10%. It's exactly the same as a 1000 rupees stock going by 100 rupees, 10% increase, which means that imagine two stocks, A and B. One is at 100, other is at 1000. The both should go through equal amount of sale increase or profit increase, similar news coming up for it to go from 100 to 110 and this other stock to go from 1000 to 1100 equal. It is not easier or difficult to get to gain 10 rupees in a 100 rupees or 100 rupees in a 1000 rupees stock. It's exactly the same. It's exactly the same. And that applies to even stock which is at 50,000 rupees. For example, Honeywell Automation, which is close to 50,000 rupees. It is equally easy for Honeywell or equally difficult for Honeywell Automation to go from 50,000 to 55,000, which is a 10% increase, to a stock which is 100 rupees to go from 100 to 110. Equally easy or equally difficult. So which means that both of these stocks get some kind of a result which is comparable, some good news which is comparable. Then they both, if one goes through 10%, other might also go through 10%. If the industry is same, etc., everything being the same. So the price of a stock is absolutely irrelevant. It is the bigger picture that you have to focus on. Behind the price, what is the valuation that the company has? As I said, a 5,000 rupees stock may be cheaper than a 100 rupees stock. So what is the valuation of the company? What is the industry it is in? What kind of PE that the industry has? There are many other factors. It's not so simple, but what is very simple is to understand that price in itself doesn't mean anything if you look at it in isolation. You have to look at the bigger picture. And second is that it's not easy for a 10% rise for a 100 rupees stock and difficult for a 1000 rupees stock. It's not. And that is the reason why people buy penny stocks. They buy a 2 rupees stock and they think that if it goes to 4 rupees, just a 2 rupees increase, they will double their money. It's not simple. Actually, for a penny stock, it is much more difficult to climb a 100% increase than a 100 rupees stock to go to 200. Actually, with very high probability, I can say that if you buy a penny stock with this rationale, you buy 100 penny stocks, I can assure you that out of that 100, 99 will go from 2 to 0 rather than going from 2 to 4. So please debunk this myth that because the price is low, it can climb very quickly, it has more potential. It's absolutely stupid. I'll continue on with many myths, and if you don't agree to my explanation, please feel free to put that in the comment section. I'll try to put that more logically, more mathematically, as much as I can. Thanks a lot for watching.